Hello and welcome to Next Gen Finance, an SEB podcast about sustainable finance. My name is Lina Apsheva, and today we continue exploring the topic of finance through the lens of gender equality. In the previous episode, we looked into how a Swedish local government funding agency and microfinance funds address gender equality through their work. In this episode, we will talk about how large investment firms can facilitate equality and diversity through the way they invest, and also through the way they work. My guests today are Yolanda Courtines, Equity Portfolio Manager at Wellington Management, and Emma Heikensten, a Senior Sustainability Specialist at SEB Investment Management and a Senior Researcher at a think tank called Ownershift. Now to our conversation with Yolanda. I was wondering if we could maybe start with you just giving us a brief introduction to Wellington Management and also what you focus on as the equity portfolio manager at the firm.
Wellington Management is an asset manager that is singularly focused on delivering investment excellence for our clients. And we do that in order to help achieve the goals of millions of beneficiaries worldwide. It's a private partnership. Today we manage just over 1 trillion in assets, and we do that across equities, fixed income, and private investments. As for me, I'm an equity portfolio manager. I've been at Wellington Management for 15 years. I've been an investor for over 25 years, and I'm currently co-managing a set of funds that seek to balance returns and responsibility. So we invest long-term in companies with high returns on capital that are committed to stewardship. And we look for companies that use that balance of high returns and stewardship to build sustainable returns into the future. So stewardship for us is about leadership. It's about focus, using capital wisely, and it's about building a business that's really going to endure for generations to come, balancing the needs of all stakeholders in the pursuit of profit. So really focusing on what is the impact on people, what is the impact on the planet, and how does that balance with the pursuit of profit?
As you know, the focus of this episode is on finance in relation to gender equality specifically. So I'm wondering, what is your view on how these two things relate to each other?
Now, there's a growing body of empirical evidence on the benefits of diversity. It's also the right thing to do to be inclusive of our society more broadly. We've found that companies that lean into diversity, so looking for a strong representation of gender and ethnicity in their leadership teams, in their boardrooms, and equally and importantly across their base of employees, can drive better financial outcomes. And so when we include our analysis of diversity into our investment process, we think that can help drive alpha for our funds.
I mean, that's really cool. It sounds like you can see quite a clear link between these two concepts. So I'm wondering if you could get a little bit more into how exactly do you consider things like equality and diversity when you make investment decisions in your role as an equity portfolio manager?
These are all aspects, there are numbers around them, but it has to be more than just the quantitative. We have to look at the qualitative aspects as well. So we start very simply, just looking at the numbers. What is the mix of gender and ethnic diversity on boards? What is it in the executive suite? What does it look like throughout the employee base? And we also think about what is the talent pipeline? Are the right opportunities be given equally across the employee base? What are they doing as a company to attract and retain diverse talent? And does the company have any stretch ambitions? So are they setting targets for improving their mix of women or ethnic minorities in the workforce? How is management incentivized to support things like diversity? And how does that culture of the company contribute to a sense of inclusion? We spend time looking at things like human resource policies and areas like, again, management incentives or benefits and how those align with diversity goals. And I think all of that analysis you have to bring together, both the numbers, the ambition, the credibility of the plan, the softer themes like culture, and bring that into a mosaic when you're thinking about investing in a company.
From what you're saying, I can imagine that there's quite a lot of interaction between you and these companies. And I'm wondering, what kind of patterns are you seeing when it comes to sustainability as a whole, maybe, but specifically with diversity and gender equality and the way that they address these issues?
Yeah, so we've spent a lot of time talking for companies that have large employee bases. I think it's particularly important, right? And so we've spent time talking to heads of HR to understand their culture and their views towards diversity, understand what policies they've put into place, We recently were speaking with a large consulting firm, and they were sharing how they've taken the pressure off of their consultants who might have just started a new family and created equal benefits for everybody. So that levels the playing field, and also allowing those consultants to work close to home in that first year after the birth of their child. And that's one of these types of elements that really helps build an equal playing field for opportunities across the gender spectrum. And that is critical in our view towards building that positive cultural bias towards diversity.
Yeah, definitely. And it's these small little things that in the end will result in a more diverse and more equal society, isn't it? So it's really cool to hear. But speaking about Wellington's, as a firm, do you have any considerations around these issues when it comes to your overall investment strategy? And if so, could you share what they are?
So I guess our portfolio managers, and we're an investment firm that is built up of a community of investment boutiques, and each portfolio manager uses their own philosophy and process because it's important that we embed authenticity in how these portfolios are run. So you will get a variety of approaches to thinking about diversity and how and where that weighs in. But we do at a firm level think about holding companies to account. So we certainly vote against boards globally that don't have at least one female board member. We're also looking to do things like support a growing number of shareholder proposals that are on ballots, either to encourage companies to improve their diversity disclosures, or to undertake audits around diversity and racial equity as similar examples. So there is an overarching framework for engagement. Our ESG analysts internally spend a lot of time pushing companies on these themes, and then each portfolio manager integrates all of that in a very authentic way to their philosophy and process.
And speaking about the wider investor community and the investment community, you have been in the industry for over 20 years and you have a lot of experience. So I'm wondering, have you seen any changes when it comes to the way that these topics are talked about or considered in the industry in the past 10 to 20 years?
Absolutely. I mean, I started my career as a banks analyst, analyzing bank financials, and I was often one of the only women in the room, and that's changed a lot. I look at our firm, I look around the room when we're having our investment debates, and there's such a strong intake of diverse talent in all areas of the business, and that really matters to changing the nature of the conversation, and it helps ensure that we're focused on that going forward. And you've seen such a change in the willingness to talk about some of these softer topics that we find are absolutely critical to a company's long-term success.
And why would you think it's important for investors to actually look at these topics, such as gender equality or inequality, diversity in general? And what do you think that investors and the larger financial community as a whole can do to continue facilitating the move towards a more sustainable society?
I mean, I think the bottom line is that there's increasing evidence that this helps contribute to outperformance over time. It's long-termism, but it reduces turnover. It creates more diversity of thought across the employee base. There's a lot of evidence around that. I think when you think about sort of what it's important for the investment community to do, I think we've spent a lot of time analyzing income statements and balance sheets historically, right? And these are going to remain really important tools, but I think investors really need to spend more time understanding that there's a lot of value in both the non-financial data and even the less measurable data, right? And so, whether that's on the environmental side, companies with large environmental footprints, if you look at their data on carbon and it starts to come down, that's showing you maybe they're adaptable and they're really embracing the energy transition, and you get value in that. Well, you do the same thing for large employee bases, and whether that's a consulting firm, the example I gave before, a catering company, a retailer, the strength of their engagement scores, their employee turnover, diversity statistics, they're all equally as informative in my mind to accounting data. Then you can look at some of the less quantifiable topics like culture, ambition, long-termism, level of board engagement, and challenge on these topics, and that tells you a huge amount. And I think that's been until now often underappreciated by many portfolio managers.
I'm curious, do you, in your own experience, have any examples of companies where, maybe you've chosen to invest in them, and then you see that they're outperforming their peers just purely on being a more diverse company or a more forward-looking company. If you have any specific examples, I think it would be really cool to hear about.
I mean, I think it's so hard to disaggregate that data, but I think it comes back to those examples of the right policies, the lower turnover, the right metrics and statistics to stretch. And, I think it's more, in my mind, turning the question on its head. And we run in our assessment of companies, we have a wall of shame, right? Where we put companies on the wall of shame if in our team notes if we see them having really bad practices. And those usually come back to really be a problem in terms of how they are able to build culture at a firm, and whether that is, particularly in topics around diversity and gender. There can be issues of sexual harassment. There can be issues of inappropriate behavior in leadership. There can be lack of proper challenge in the boardroom, because everybody in the boardroom, is a member of the same golf club, and they all look the same and talk the same, and that is detrimental to the long-term responsiveness and awareness of the company to what the global threats and diverse perspective might bring. So these are all critical elements that we look at, but we take a very long-term view to our investment. I think it's really hard to see that on a shorter-term horizon. And so disaggregating that is really hard, but I like to say it's a combination of great empirical back testing over time, that, there's a lot of great work that's being done, together with a belief statement going forward that getting this right matters, because you are reinforcing the importance of people within your organization, and that creates loyalty and buy-in that strengthens your culture, strengthens your moat, and helps allow you to both price and sustain your business and create more innovation going forward.
Yolanda, I'm thinking some of our listeners listening to our conversation right now might be thinking, okay, where can I start when it comes to integrating this type of sustainability thinking into my own investments, maybe even as a private individual or someone working in investment management or in other areas of finance? So I'm wondering, do you have any piece of advice to a person like that?
I think it is thinking more broadly than just again about traditional accounting metrics when they're thinking about investments. Asking the questions about what either a stock or a portfolio looks like in terms of gender mix relative to the market, or ethnic diversity, and what the attributes of the companies are. And you can start very simply. If you're looking at analysis of a company, start with their sustainability reports. Look at the data. Look at whether they're just putting a lot of pretty pictures in there, or whether they're actually showing you the data broken down in a way that's relevant and that has a history to it, and where there's a sense of accountability. And then ask questions. If you have an opportunity to meet with a company, make sure that that's part of the conversation that you're having.
Thank you so much, Yolanda.
Thank you so much for having me.
And now to our conversation with Emma. Hi, Emma, welcome.
Hi, thank you so much for inviting me.
I was wondering if you could maybe just briefly introduce yourself, and what do you do exactly at SEB Investment Management as the Senior Sustainability Specialist?
So at SEB Investment Management, we have thematic responsibilities where I'm to some extent more responsible for social questions. What we do, it ranges a lot from knowing all the new regulations and making sure that we follow up on them in a good way, but it also involves building our sustainability models, working with data analysis, and of course communication. Both internally and externally, making sure that everyone knows what's on the agenda for sustainable investments, etc.
So as we're recording this episode, the campaign in SEB that strives to highlight financial equality and gender equality is just about to roll out. And I know that you're actually one of the founders and kind of the original thinkers behind the campaign, which is now it's in the third year, right?
Yeah.
So I was wondering if you could tell us a little bit about this campaign. It would be really great if you could give us a bit of a recap.
It all started with me giving this seminar to the Marketing, Communications and Sustainability Department, as it was then 3 years ago on these topics, which are the topics that I have previously done research on. This seminar, we focused on societal trends on savings and investment and ownership, and looking at how women and men do this slightly differently and why that is. And then I presented some data on SEB customers in front of this group, and we decided that this is a subject that we could work on, both from a sustainability but also from a sort of business and marketing point of view. So the first year we launched a campaign, Why Women Don't Own, which sort of highlights the question of gender differences in finance from an historical point of view. So the campaign film sort of starts back in the middle of the 19th century, like 1845 or something like that, when the laws and regulations were changed in terms of being able to inherit money or not as a woman. And then we move on towards today with all the sort of regulations, laws that have changed over time, coming into more recent days where it's rather the norms that sets up the most important barriers for women. And then the second year, we focused more on these barriers of today and looking at also income streams that affects ownership over a lifetime. For example, salaries and working part-time, taking more parental leave, etc. And then now this year, we're focusing more on having the opportunities. You know, are opportunities equal? What can we do to make them equal?
And I know that outside of SEB, like we said, you also represent Ownershift. And I know that the reports that Ownershift has produced are in some ways kind of linked to this campaign as well. And by the way, I would strongly recommend to anyone to go and read those reports because they provide a really good kind of insight into these differences between the genders when it comes to ownership. But I feel like I'm getting into it a bit myself, but I thought I'd ask you to give our listeners a bit of a recap maybe of the reports that you have done, and in general, what is Ownershift about?
We started in 2018. Since then, we have launched 4 reports. The background to why we started was that we have some people in our group that realized as they had progressed quickly sort of in their respective career ladders, becoming CEOs, becoming board members, realizing that this is not where the power actually lies. The power belongs to the owners. This aspect and this perspective have been missing from the equality agenda and the equality debate. And then when we started looking into this area, we saw there was very little research done. The academic research has often focused on the household level, wealth, household wealth, which is very important for analyzing some questions of equality, of course. But this is an aspect that has sort of been forgotten. So in the first report, we decided to look at the data we could find on ownership in Sweden. So we looked at different assets. We looked at stocks, we looked at real estate, land, companies, but also cars and patents. And then we also have this whole list of improvements that we have asked our government mainly to take a look at. And then in the second report, we focused on why we have these differences. So it's basically a literature review of why we see differences in ownership. And, this is quite a heavy read from page to page, but we define it in 3 main areas where we have the man as the norm as one sort of chapter, talking about sort of the historical perspective and how this sort of luggage that we have do reflect our decisions today. And then we have the second chapter, which is called All the Small Streams, which is about the money that you received throughout life that do affect the possibilities you have to own stocks, for example. And then thirdly, we have this chapter called Catch 22. That's about behavioral aspects of this, where it's often said that, oh, women just need to take more risks. Or need to sort of go into negotiation more, which is not true, actually. There are also many studies showing that you would receive a backlash if you go into something that's a sort of non-stereotyped in that sense. And then the fourth report we launched early this spring on Valentine's Day, and it's about marriage and divorce, looking into how ownership looks like within couples and after divorce.
I love that little touch of launching it on Valentine's Day. It's really cool. And I think, you representing both SEB and Ownershift, I feel like I have this opportunity to ask you from the banking perspective, right? From SEB side, but also from the side of financial institutions in general. Why is it important for us to look at these topics and then these kind of patterns in society that you've just described?
I mean, there are so many reasons for this, and I would say it's the same as for sustainability in general. A country or the world will be a better place if we are more inclusive. If we, integrate teams and can really bring out the ideas from these teams and make them more efficient, with diversity. It's important for the individual person, of course. Every advisor who meets an individual who wants to start a company, who wants to start saving, or who already started a company and started to save, we can meet them and influence them in ways that we might not understand ourselves sometimes. And I think that it's important to be aware of these sort of behavioral aspects and the norms and the structures within the financial system and the financial sector that can, make people not feel welcome, even though they certainly are. And secondly, we have sort of the society level. We have the companies. I mean, we do believe that companies who, think about their employees' well-being are better companies. And thinking about the employees' well-being means thinking about both women, men, minorities, etc. And, those companies will perform better, especially over time now when the competition over talent is increasing in society. So this is definitely a business opportunity as well as a moral statement.
From my perspective, as an analyst in sustainable finance, I can say that it also kind of goes both ways, right? Because not only do companies have the chance to, perform better on their own, but maybe they have a chance to get better funding from investor side, because I would say that investors are now also taking things like gender equality performance into consideration. So they are looking at, okay, which companies are performing better when it comes to gender equality. Have you had any examples like that in your role in investment management?
Yes, I really think that this is an area that's sort of increasing in interest. And we saw after the campaign last year that many people did contact us and to ask if we have an opportunity for them to invest in women in some sense. And since then, SEB Investment Management has released a fund on this topic that both focus on gender equality in boards and leadership positions, but also on labor market related policies and the well-being of employees.
I'm really happy that you mentioned that, because I was actually going to ask next about, what can we do as a bank or as an investment management firm and financial institutions in general. And I know that there are some concrete examples, like, for example, the fund that you just mentioned. So could you tell us a little bit more about it? What type of fund is it and what is it looking at?
The fund is called the SEB Global Equal Opportunity Fund. And as I mentioned, it's sort of is a global exposure fund, so it's a pretty broad fund, but we make sure that we focus on inclusion as one of our main aspects. And I mean, the data points that we both to sort of limit our sample of companies that we invest in on, but also optimize on, are related to gender diversity, but also more focused on the sort of business idea. And, for example, making sure that countries in Africa, everyone gets access to a mobile phone or internet, etc. So, inclusiveness in a broader perspective as well. So, I mean, that's one thing. As a whole bank, we can do a lot on this topic.
And are there any other examples of what individuals who are, for example, clients at SEB, but also just thinking in global terms, private individuals who have a bank account, what they can do when it comes to gender equality to make sure that they do get access to that equal opportunity that we're highlighting with this campaign?
Investing in gender equality, like investing in this type of fund, is one way. Another way would be to actually, contact your bank and tell them to work more on this type of topics. I think, and contact the fund managers that in the funds that you actually invest in currently. But then there's also, of course, important aspects that you can work on as a private individual in your private life, making sure that you talk about the ownership and investments in your relationship. That could be one aspect. Making sure that you, split parental leave, part-time, those type of questions.
I know that SEB has a tool available to, I think, anyone on the website where you can kind of calculate your pension, I believe. Do you know the tool I'm talking about? Could you tell us a bit more about it?
So the tool is there to provide information about the effects that part-time work can have on your pension. So if you go into that website, you can you write your salary and you write part-time to what extent, 80% over X amount of years, etc. And then you get information about how you need to save, not to sort of lose too much money towards your pension.
And I guess we're talking here in the context of that women usually tend to start working part-time a bit more, for example, when they're having children. So
exactly.
I think it's another great example of how such a simple, if you think about a tool within finance, can help address the question of gender equality and, women not owning as much, going back to ownership. But now I'm thinking, if there is anyone listening to us now who works in finance or maybe in other areas of business and is thinking, okay, how can I integrate this type of thinking into my work and maybe provide this type of tools to my clients? Would you have a piece of advice for that person?
I mean, it of course it differs a lot from what type of position you have, and I mean, as an investor, it's important to look at the sort of the gender composition of the company that you invest in, and talk to them as an active owner about these type of questions. I mean, if you work as an analyst or as a data scientist, try to have the gendered eyes with you. I mean, look at gender differences, include these type of aspects when you do analysis. And I think that, as a communicator or working with communication, any type, it's also important to use words that are familiar to everyone, especially, I mean, if you work on external communication, this is extremely important. I mean, and this is, now I'm not even mentioning all the HR perspectives we have on diversity and inclusion. And there, there's so much to do. I don't even know where to start. And especially those also sort of connects to the manager role and the recruitment role, etc.
Yeah, definitely. I think that's a great piece of advice. And we're definitely just looking at it from the perspective of sustainable finance, but the world is so huge out there when it comes to what we can do to address gender equality. And I think not only gender equality, but equality in general, and to build a society that's more inclusive to everyone. All right, Emma, thank you so much for coming and speaking to me. And it was a pleasure to have you. Hopefully we get to meet again in the future when there are new, endeavors that you embark on when it comes to gender equality. It's going to be really exciting to see.
Thank you for having me.
And a big thank you to all of our listeners for tuning in. As always, you can reach out to us with questions or ideas for topics for future episodes on nextgenfin@seb.se. Don't forget to subscribe to the podcast wherever you're listening to it on. And yeah, stay in touch. Bye.